Scalping is a high-frequency strategy that targets tiny price movements using ultra-short timeframes like 1-minute or 5-minute charts. The first image shows multiple box zones where the price consolidates. These boxes represent areas of order accumulation. Smart scalpers identify these as high-probability zones for breakout or breakdown. Once price breaks out of a box, momentum rapidly picks up, offering a brief window for profit. Notice how the red and green rectangles signal possible institutional activity. Entry triggers often follow a liquidity sweep or a strong engulfing candle. Scalpers wait for the price to show commitment, usually with a spike in volume, before entering. A tight stop loss is placed just inside the box to minimize risk. Profit targets are generally 1-to-1 or 1.5-to-1, as the aim is to scalp short bursts, not hold trades long. The second image shows a clean breakout retest setup. A resistance level is established by multiple price rejections, forming a horizontal ceiling. Eventually, a bullish Marubozu candle breaks this resistance with strength. This is our breakout signal. But instead of entering impulsively, a seasoned scalper waits for the retest. The price pulls back to the broken resistance, now acting as support. This retest confirms the validity of the breakout. A precise entry is taken here, with a stop loss just below the new support. The reward is calculated using a 2x risk-to-reward (RVR) target. This method avoids false breakouts and improves win rate. Such patterns often occur during high-volume sessions or following news events when price action is more trustworthy. The third chart introduces the Parabolic SAR, a trend-following indicator that plots dots above or below price. Dots below price suggest an uptrend and generate buy signals, while dots above suggest a downtrend for sell signals. In this scalping setup, the key is to enter at the dot switch point. When the dot flips to the other side, it signals momentum change. For example, if the price is rising and the dot suddenly flips above, it's a sign of weakness. Scalpers enter short, but to avoid choppy entries, use confirmation. Pair SAR with a moving average or RSI. Only enter trades when the SAR dot flip aligns with a candle close and preferably a momentum bar. Scalping with SAR requires quick execution and low spread environments, best done during volatile sessions like London Open. This image presents a structured breakout strategy. Price remains trapped between support and resistance, forming a range. Scalpers mark the high and low of this range and wait for a clear breakout candle. Breakouts must be accompanied by volume and a strong body candle, not a wick. The entry comes on candle close or a minor retest. This setup works well on trending days, especially when the market is breaking out of pre-London or pre-New York session ranges. For a sell trade, once support breaks and price closes below, scalpers enter short and ride the downward momentum for 5 to 15 pips. Always avoid fading the breakout. Follow momentum, not anticipation. Use M5 time frame for clarity and M1 for entry precision. Bollinger Bands are excellent for spotting overextended price conditions. In this image, price consistently touches the outer bands before reversing. The setup is simple. Wait for the price to touch or pierce the upper band, then check for a reversal candlestick pattern, like a pin bar or engulfing bar. Enter a sell trade with a tight stop above the wick. Vice versa for buys. The target is the middle band, 20-period SMA. Scalpers use this method in ranging markets or sideways sessions where price oscillates between extremes. Confirm with RSI or volume to avoid entering on momentum bursts. Patience is key. Don't fade price if the bands are expanding. Only act when bands are flat and price rejects the outer level. The sixth image illustrates a double moving average crossover system, usually 9 EMA and 21 EMA. When the fast EMA crosses above the slow EMA, it signals bullish momentum and a buy opportunity. The price should be making higher highs and higher lows. The best scalping trades occur during strong trend phases where these EMAs remain separated. Entry is taken on the candle immediately following the crossover confirmation, and exits are planned at minor support resistance zones or on EMA recrosses. Avoid this method during sideways markets as it gives false signals. Combine with MACD or RSI divergence to strengthen setup quality, ideal for M1 and M5 charts during peak volume times. This setup enhances the Bollinger reversal strategy by adding the stochastic oscillator. The chart shows how a stochastic overbought signal, combined with the price touching the upper Bollinger Band, forms a powerful sell trigger. The same logic applies to oversold buys. The lower part of the image marks entries as good or fake, illustrating that confirmation is crucial. When both indicators align, the entry has a higher success probability. Fake signals occur when the stochastic is flat or diverging from price action. Scalpers using this combo are more selective, filtering out weak setups. Add in candle rejection or engulfing confirmation to solidify the entry decision. This image shows 3 different SMAs, 10, 50, and 100. The 10 SMA tracks fast momentum, while the 50 and 100 guide long-term trend. The key concept: trade in the direction of the higher SMA slope. If all 3 are stacked upward, 10 above 50 above 100, that confirms bullish bias. Look for pullbacks to the 10 SMA for scalping long entries. The same applies in reverse for shorts. This layered method avoids trading against the dominant trend. Use price action like bullish engulfing candles or wick rejections on the 10 SMA to confirm entries. Only exit trades when the 10 SMA flattens or crosses back. This chart uses short-term SMAs, 5, 8, and 13 period. It's a momentum-based strategy where scalpers enter when the 5 SMA crosses the 8 and 13 from below. This suggests momentum shift in price. The setup is best used on trending pairs like GBP/JPY or Nasdaq during London, New York overlaps. Buy signals occur when all 3 SMAs align upward with price closing above them. Entry is taken at the 3rd or 4th bullish candle. Exit when the 5 SMA crosses down or a candle closes below the 13 SMA. It's simple, visual, and very effective for fast-paced trading with confirmation. The final image explains scalping using raw bid and ask prices. The concept: buy at the ask and sell at the bid, capturing micro movements like 2 or 3 pips. This method is spread-dependent. You need ultra-tight spreads, preferably zero or raw spread accounts. The image shows a clean 2-point profit zone between entry and exit. No indicators are used here. This is pure price action and speed-based scalping, often used with DOM, depth of market, tools, or level 2 data. Common among professional scalpers or algorithmic bots who rely on ultra-fast execution and low latency. You've now mastered 10 powerful scalping setups, from breakout retests to Bollinger Bands, EMAs, and institutional-style micro scalps. Each setup has its strength, but all require fast execution, strict discipline, and a clear mind. Always use a demo account first, understand your risk tolerance, and only scale once you've proven consistency. If you found this guide valuable, don't forget to like this video, comment your favorite strategy below, and subscribe to Financial Freedom FX for more weekly high-quality trading education. Let's grow and trade smarter together. You've now mastered 10 powerful scalping setups, from breakout retests to Bollinger Bands, EMAs, and institutional-style micro scalps. Each setup has its strength, but all require fast execution, strict discipline, and a clear mind. Always use a demo account first, understand your risk tolerance, and only scale once you've proven consistency. If you found this guide valuable, don't forget to like this video, comment your favorite strategy below, and subscribe to Financial Freedom FX for more weekly high-quality trading education. Let's grow and trade smarter together.